Hello Jaguars, I'm back. This is Fahad. Um, so let's take a look at Apple, symbol AAPL, Apple. It's time to get long. That's the message in this video. I think this is presenting a fantastic buying opportunity. After all the work and analysis I did after the market closed today, I think that it is giving you that very good opportunity to get long here with very low risk to downside and potentially significant upside from here. So as usual, using the same three-pronged approach that we use all the time based on fundamentals, technicals, and option activity, I'm going to lay out the groundwork here, and so let's get started. First, I want to take a look at something very interesting in the option market. So I'm going to go dive straight into that. Now, this has been happening, this has been appearing on my screen in the option market for the last couple of weeks, but I don't want to make a case yet because I wanted to actually, I joined Jaguar Analytics only on Monday, and I was basically, I had that 10 to 15 days break after I left Option Monster, more like 10 days break. And so the activity was taking place during that time, and I don't want to just talk about it openly on Twitter. I figure when I come over here, I can just give you a trade idea based off of that. So scroll down, pull up the option chain, and scroll down all the way to right here to January 18. This is the farthest month that you can go to, right? Go down all the way here, January 18. And you're going to see this 50,900 open interest in January 18, 95 strike calls. It's right here. 95 strike calls expiring in January 18 is 50,000 open interest over here. Let's go ahead and click on that. You can do all these tricks in Thinkorswim. Click on that, then go here, and let's chart the price of option itself. And this is what you're going to see. Here the screen shows up. Let's maximize the sell. Let me clear the theoretical price, theoretical option price, because this is useless here. And so here's the chart. Here's the chart of the option itself, of the Apple January 18 95 strike calls. Okay, this blue line that you see right here is the open interest. Okay. Now, see what happened in the stock when it reported earnings on April 26th. The stock crashed big time, right? And along with it, the value of these January 18 95 strike calls, they crashed big time. They went from $18 a contract to $14, and they started to stabilize around $12 a contract. Then, do you see that big giant spike right over here? That happened on May 3rd. Somebody came out, and right here is the screenshot. Somebody came out, and this is January 18 95 strike calls on May 3rd, and they bought 10,000, more than 10,000 actually. Total were 14,000 contracts traded at the time. They bought more than 10,000 of these January 18 95 strike calls for up to $13.25. The bid and ask at the time of the trade was 13 times 13.30. So they paid near the offer, 5 cents below the offer, right? It was a 30 cents wide bid and ask spread. They bought 10,000 contracts of these. That's a $13 million bullish bet. Okay, that happened on May 3rd. What happened May 3rd? Right here. The stock collapsed after earnings on April 26th. They came out 4 days later, and they were buying those for cheap. Then, see this another big volume spike right here in the volume? That was last week. That was on May 12th. That was Thursday of last week. And here is the history behind it. Let's go back here, pull this down, go up, go to May 12th, and let it come up. Here you go. Somebody came out and they bought in one large block at 10 o'clock in the morning on Thursday last week. They bought 12,700 contracts for $11.10 offer side when the bid and ask was 1080 times 1110. That was a $14 million bullish bet. So between this and the one that happened a week before this, they accumulated approximately 27 to 28 million dollars worth of call options, all in January 1895 strike calls. And as a result, you can see this blue line is the open interest. It jumped, flat line, and jumped again. And since then, the gradual accumulation continues. This is the highest open interest we have seen in this particular strike. Since basically they were buying it way back here in January too, by the way. But anyways, so big call buying taking place in Leap way out there in January 18. Big call buying is taking place for the last 2 weeks. So is it surprising that after they accumulated $28 million worth of call options, which happened on Thursday of last week, then this is the Apple chart. On Monday this week, 2 days later, the news comes out that one of the big portfolio managers who work for Berkshire Hathaway with Warren Buffett bought $1 billion worth of stock. By the way, that transaction was not done by Warren Buffett himself or by Berkshire Hathaway. It was done by one of his portfolio managers. He's got very bright minds, many bright minds working for him. So one of the portfolio managers bought $1 billion worth of Apple stock. That happened 2 days after they were done accumulating $28 million worth of leave call options. That's why on Monday the stock popped. Even though the rest of the market was looking quite dismal, the stock popped and rallied all the way up to 94. And today, when S&P was down almost 1%, and Nasdaq at one point was down 60 some points, Apple wasn't giving back. Apple was actually holding pretty good, right around here, around $94 a level. Okay, so we have massive leap call accumulation here. Technically, on the chart, I'm gonna just lay it simply. See, this big crash happened that right here. This was back in August of last year, and right here in late August last year, the MACD turns bullish cross. We had a bullish cross in MACD. The RSI broke out and the MACD turned bull cross. Later on in the next 2 to 3 months, the stock rallied by almost 10 to 11%. Then it came back down pretty big time, and right here in January 21st, MACD turned bullish, and subsequently in the next 3 months the stock rallied almost 15 to 20%. Once again the stock has crashed big time, and right here the MACD is about to turn bullish cross, and RSI jumped big time when that portfolio manager from Berkshire Hathaway actually disclosed that stake. Okay, so what I expect from here is the stock to gradually start ramping higher again. In a very short term, my target is this gap fill. Actually, it's a little more than gap fill, because I always pay attention to these volume over price supports and resistances. That big volume over price resistance will come into play at exactly 105. So with the stock at 93 and this resistance at 105, which coincides with the gap fill, I'm looking for almost, $12, so about 12-13% run in the stock in the next couple months. Then it may consolidate over here. The big chunk of resistance will not come into play until about 108.50. Okay, that will be the next major layer of resistance, and then I expect a really big pause over there, because I expect the stock will struggle right here around 108, 109. So it's going to need some significant fundamental news at that point for this to continue to power higher. Maybe some really kick-ass sales from iPhone 7 selling blockbusters and the growth re-accelerating and whatnot, and we're going to cover those in just a little bit. Alright, so it's possible that if iPhone 7 is a big success, that all this congestion area that's going to come into play between 110 and 116 is not going to matter. The stock is going to continue to pop and maybe possibly go all the way back to right here 126, 127 level. But one step at a time. Technically, in short term, in next couple months, my target is 105. That's about 11-12% to upside. After that, second target is 108, and after that, the third target is going to see, depends on the iPhone 7 success, it could be much higher, 120, 130 level. Okay, so we got the technicals and we got the option activity, and now on the fundamental side. Here is my model. Here is a very interesting model that I just put together after market close today, in the last 1 to 2 hours, after digging around and doing some very deep research. This is my work. This is not anybody's work. You're not going to find this anywhere. And this is what we do at Jaguar Analytics, okay? And I'm not the kind of a guy who's just going to give you technical and tell you option activity and tell you somebody is buying $1 million worth of calls, so you should just jump in the pool when they jump in the pool. That's not what we do in Jaguar Analytics. I have to give you color because that's how I trade for myself and invest for myself. So that's what I'm going to lay out here for you. On the fundamental sides of the things, I took a deep look at why Apple is struggling and why the iPhone sales are actually slowing. I wanted to dig deeper into it to understand all the dynamics. Is it the industry-wide sales that nobody is buying smartphones anymore? Is it the macro environment that is slowing big time? Maybe. It is the retail sales that are coming down. I mean, the retail sector has been collapsing with all kinds of apparel stocks coming down sharply, so maybe that plays the same role in Apple as well. Apple, in the end, is a big retailer as well, right? With a lot of locations, so maybe that's the factor. But maybe it's the Chinese sales. But maybe there are other things into it too. Maybe there are other things that nobody's talking about yet. And I found some very interesting tidbits that I ended up putting together in this beautiful model that's in front of you, and I'm going to go through this line by line. But here's a big picture that you need to keep in mind when I go through this model. A big picture, what I came back with was that one of the main reasons why we saw the iPhone demand and the sales come down sharply this year so far is actually a function of the longevity of the replacement cycle. You see, if you go back a couple years, we used to be in a situation where the hardware in iPhones, or really any smartphone, was lagging behind the consistent software upgrades and the need on consumers' part to be able to do more stuff on their phones, whether it was playing games, whether it was surfing the web, whether it was downloading apps, online banking, whatever you guys do. You know, the hardware was not powered enough, was not catching up with the consistent need to catch up with the software. And so the replacement cycles at the time used to be much shorter in nature. What we used to see was that you will buy an iPhone and within 1 year it will be obsolete. It will be obsolete because the apps will start to slow down, and the hardware, whether it was memory or the processing power or whatever, was just not big enough to catch up to keep up with everything you needed to do. That actually changed. I actually went through some scientific journals, and I'm not going to bore you with all those details. I went to a lot of details about this to kind of see the disconnects that were taking place, and I came back with a conclusion that a big part of the reason why the iPhone demand has actually slowed down has to do with the hardware having caught up completely. And now these phones have become just so damn smart that they just tend to last longer. Okay, so the replacement cycle in old days used to be 29, in 2015 it was basically 29 months. And now in 2016 it's pushing to 32 months. If you go back further, actually before 2012, you would see, I don't have the data here, but you would see that the replacement cycle was more like 27 months, 26 months, and so on. And so the replacement cycle has actually increased a little bit, and that means people are simply holding on to their phones a lot longer than previously, and that's playing a huge role in the need to upgrade. So what that means is that the install base out there continues to grow, but the replacement of that install base is slowing. People are buying the phone, but they're buying at a slower pace just because they don't have the need. I mean, I could speak that about myself too, because I love my iPhone 6, and I don't know when I'm going to replace it because I don't have a need. It works just fine. So what I did in this particular model is I wanted to take a look at fundamentals from a completely different angle. I went straight after the global install base. This is iOS global install base. And what I wanted to take a look at it is that even if the replacement cycle gets longer and longer, there should come a point at some point where it's going to play a catch up, right? It's going to play a catch up. It's not going to be that suddenly that the demand is just going to completely disappear. We see this in PC cycle. We see this in almost every other technology cycle. Excuse me. So it's going to play the catch up over here too. So what I'm going to do over here in this model is I plugged in the numbers from all different kinds of consensus view on the street and then really slash those expectations to the lowest point that I think the most conservative way possible to arrive at a conclusion to see whether the growth is going to pick up or not in 2017. And I came up with some extraordinary numbers. I think you're going to see growth accelerate sharply going into 2017. That's the message here. And that's going to be without the iPhone 7. iPhone 7 is going to be the icing on the cake. I'm simply looking at the global install base and I see an uptick coming in the just simply from the replacement cycle going into 2017, and I see the growth ticking higher. So I'm just going to quickly walk through these. This line right here is the total install base of iPhone globally. Okay, so 2012 was 248 million. It's been rising every year since then. 337 million, 440 million. The consensus is looking for 720 million consensus, the install base in 2016. I said, it's not going to happen. Let's cut that to 693 million. Okay? It was a function of a bunch of math that I did in this model. The consensus was looking that the total gross, by the way, the consensus has already taken down 2016 estimates big time, so keep that number in mind. The consensus has already taken down numbers on the street big time, because after the last earnings came out and the stock collapsed big time, so the numbers were cut sharply across the entire spectrum. And I'm saying, no, I'm going to take those numbers down even lower. Just for very, very conservative view. Let's take this to 693 million. The gross ads, the consensus estimates 555 million. I said, let's cut it by 10%. Let's take it down by another 10%. They expect churn rate, which are the number of people that basically simply quit using the iPhones. They expect churn rate of 35 million, which is about 5.8% of the previous year's installed base. I said, let's increase that to 7.7%, which is actually the average of the last 4 years. So it is the average of these 4 years, okay? I said, why go to 5.8%? Let's increase that to 7.7%, which means the churn rate goes higher to 46 million. So the net impact is the net sub ads that everybody's expecting in the street is 120 million. I said, no, it's going to be 93 million. I mean, really, the install base is going to grow by only 93 million on the entire year. The replacement unit demand, that means the number that I come up with, 225 million. Okay, that's a function of using the lowest of the last 4 years of the replacement rate. So basically these are the last 4. I went with the lowest rate that we ever saw, which is 37.5%. I plug that in and I come up with 225 million. Continue to go down further, and I found out that means the consensus looking the total demand units of 384 million, subtract the number of recycled phones during this time, the net right here is the bottom line. The consensus is looking for the year-over-year growth rate of minus 11%, which comes out to be 204 million iPhones to be sold this year. And I came up with 191 million, even worse than consensus, which is minus 17% year-over-year rate. Okay, after building a whole bunch of consumptions. So you're gonna think, oh wow, this is even bad. This is just awful. Why am I even, why am I even suggesting to get long Apple? I do think, to be honest with you, there's a chance that you're gonna see based on these numbers, very highly conservative numbers, that the next quarter is also gonna be bad. So I think that the numbers may actually still get progressively a little bit bad going forward from here for just maybe another 1 or 2 quarters. But I think with the way that we have seen the reaction in the stock in the last month or so, that's now already built into the stock. What's most important is when that replacement cycle starts to kick in. and my numbers show you're going to see sharp reacceleration in earnings in 2017. Keep in mind one thing. This is very important. The fiscal year for Apple ends in September. They don't go by calendar year, they go by September. So the fiscal year for Apple ends in September, which means when I say 2016, that means for Apple 2016 is going to be over in September of 2016, which is really in just a matter of 4 months. That's why this 2016 number doesn't even matter anymore. Market is always forward looking, and in 4 months 2016 will already be over for Apple. We're going to be looking at 2017 numbers. That's how you have to take a look at Apple. And I'm expecting a significant increase in the growth rate in 2017. And that's not even based on the iPhone 7 success or any success at all, which is going to be launching in fall of this year. This is purely based on the install base going higher. So my install base next year for 2017 goes to 765 million versus consensus as 825 million. That's a 60 million less. My gross adds once again are 10% less. My churn rate once again is higher than consensus view, but this is where the fun things happen. Replacement unit demand is going to be 260 million based on all these numbers, and based on that I come up with the total iPhone unit demand rate of 429 million, which is just above actually the consensus view. I plugged in the possibility that 30% of the installed base will actually recycle their phones versus 22% historically. This is also very conservative view, and with all the numbers I plug in, I come up with the magic number that is iPhone unit sell-through will be 221 million in 2017. That's a 15.6% growth, return to growth, 15.6% growth next year, after a very, very bad year that Apple is going to close this year in 2016. All right, so market is forward looking. When in the next couple months, when people are going to start basically basing this stock based on what the forward view of 2017 looks like, and I think you're going to start to see the numbers start to move higher again, because nobody will believe the number is going lower, 291 million, just because the installed base continues to grow. And so you're going to see, I think you're going to see the numbers go higher again to 221 million. And I think if iPhone 7 is just another monumental success, by the way, there are rumors that iPhone 7 is going to have 3D. And 3D means this is a game changer. This will be a massive thing. Apple is essentially, there are patents already filed. Apple is working on a potential phone that allows you to actually watch shows on your phone on a in 3D without actually putting glasses on. It's a simple app that you turn on and off, and it turns the phone and the screen to 3D, and then it turns it back to 2D. In fact, there's another research report that I read that was talking about Seagate and Toshiba, which are big suppliers to Apple, working on 3D NAND chip, and that's going to be powering all this. I'm not going to go into all that detail. So anyways, I'm not even accounting for iPhone 7 success, if that happens at all. I'm simply looking at the replacement cycle of the existing install base, and I see growth returning back to plus 15%. To 221 million, and that's after building a whole bunch of very, very conservative assumptions well below street estimate. Hell, you can just take this 221 million figure that I have for next year for the iPhones and even cut that by another 10 million. That will take it down to 210 million, and it will still be some 10% return to growth, positive growth, after minus 17% that we're going to see this year. So with all this said, I think the growth is coming in front of us. You want to step in front of that. You want to get long. The technicals on the chart are pointing for a breakout right here with the MACD turning higher. The volume is very significant. Big portfolio manager Berkshire Hathaway is building a position of 1 billion. And lastly, in option market, we saw over 14 plus 10, basically almost somewhere about 27 to 28 million dollars worth of these long-term January 1895 strike calls bought. So how would I trade it? There are many ways to trade it. frankly, I don't think you need to go out to January 18 to make this play, although it doesn't hurt. You can never go wrong just buying leap calls, because you can just put him away and then come back in a year and see where you're at. But you increase your cost, and when you increase your cost, you also reduce your return. Okay, so how would I want to trade this? I want to go straight to August. This is where I want to go. I don't want to go much below that because the market is acting a little bit weird. You know, the market internals are a little bit moving lower. S&P may potentially break down below 2040. You know, we have a little bit of, if I go over here, S&P is a chart. Right here is my line 2040. If you do break down here, we could see some panic. Maybe S&P come back down to 50% retracement of this entire move, which could move this all the way down to 1950 level. So it is a possibility. MACD and RSI are coming hard in the overall market. And so with that said, I need to give myself some time. So the way I want to play this is I want to go to August and I want to buy 95 105 call spread. Okay, 95 105 call spread, and that is going for 405 minus 105, so you can buy that call spread for $3. August 95 105 call spread, you pay $3. If this trade does not work for some reason and the time starts to eat against us, I mean there are 94 days to expiration. If a trade does not work, and even if it cost a little bit more, maybe $1, $1.50 more, I would be willing to roll these calls out further from August to October, because by going with October, this will actually capture the earnings will be coming out in July actually, so that's not the issue. But if I have to roll these calls, I will roll them out, because most likely iPhone 7 announcement will not be until September. So August will not capture it, October will capture it. Okay, and so if I have to roll these calls, I will roll them out, but for now let's just go with August. 94 days should be enough time to see an uptick all the way to 105, so I like buying August 95 105 call spread for $3. Alright, so that's my play, and once again, here is the Apple chart. Alright.